Welcome to The Long-Term Investor. Today with me is Tadas Viskanta, the Director of Investor Education at Ritholtz Wealth Management. Since 2005, Tadas is also the founder and editor of Abnormal Returns, which highlights the best of the investment blogosphere, and we'll be sure to get into that quite a bit today. Tadas is also the co-author of over a dozen investment-related papers that have appeared in publications like the Financial Analyst Journal and Journal of Portfolio Management, a monograph, Country Risk in Global Financial Management, and the 2012 book, Abnormal Returns, Winning Strategies from the Front Line of the Investment Blogosphere. Welcome to The Long-Term Investor. I'm excited to be joined today by Tadas Viskanta, who is the Director of Investor Education at Ritholtz Wealth Management. Since 2005, Tadas is also the founder and editor of Abnormal Returns, which highlights the best of the investment blogosphere. Tadas has co-authored over a dozen investment-related papers that have appeared in publications like the Financial Analyst Journal and Journal for Portfolio Management, a monograph, Country Risk in Global Financial Management, and the 2012 book, Abnormal Returns, Winning Strategies from the Front Line of the Investment Blogosphere. Tadas, thanks so much for joining me today.
Hey, Peter, it's a pleasure.
I always share your blog and your newsletter because there is so much information out there, way more than any one person can digest between the traditional media articles, blog posts, podcasts, and videos, but yet somehow you do it. And your site, for me at least, is really important in the curation of good content because I don't have to go visit every website. I can trust you to go do that for me. So let me start with the thing that I am always curious about. How do you do it?
Well, first off, I appreciate that. I think that might be the highest compliment. Being able to save people time and energy, I think is, maybe the most valuable thing that, service that I might be able to provide. So I think that's great. This is something that I've been doing for a long time. And so I have honed some skill at doing it. I'm sure I have more than the traditional 10,000 hours in it. So I have some ability to go through stuff a little bit quicker than somebody else might. And I think there is something to be said just for repetition. I think a lot of times being able to see things play out over time, I think is helpful. And I think that is something you get just from doing it every day. And I think somebody else who might be dipping in and out over time might miss stuff. And I think being able to see the evolution of things is as important as being able to look at something on just at a specific point in time. So.
Well, and you mentioned the well over 10,000 hours of practice. How much of your day is committed to just consuming content?
Oh, a big chunk of it. I mean, I think that's a big chunk of it is doing that for myself and for the firm. And, some of, and to a great degree, it's just something I enjoy. And so it's not, that aspect of it isn't, doesn't feel like drudgery or work. I don't ever feel like that's, something that's holding me back. So.
Well, I think most financial advisors are aware of your blog. And for any of my listeners who are not, they're surely going to see this in the show notes. They're surely going to see it linked many places. And I include you in a lot of articles I do because I think it's such a valuable resource as people try to consume information. Given how much information you do consume and that you must have a systematic process, how do you think anyone who's trying to figure out where to be looking, short of using your site, of course, how would you advise people to be better consumers of financial information?
I think that's a real challenge. I mean, I'm not going to discount that aspect of things. And so, I think there's something to be said for consistency, but I think you also have to become, part of it is really just kind of having your antenna up and seeing what is, whether it's the headline or whether it's, the initial content, what is it are they really trying to say? And so I think, so much of what we read and see today is, some of it's almost algorithmic, here's just an aside. I still have a bunch of Google alerts set up for certain terms, which used to be really helpful. But now, not so much. For some of those terms, like I have, one term is hedge funds, and now
boy.
all the stuff that hits is just algorithmic junk. And so you have to be able to just not only do you have to be able to look at something and say, where is this coming from? Part of it, then the second aspect is, does somebody have an agenda? What are they trying? Are they trying to sell me something? Are they trying to push me to a certain, viewpoint, which, doesn't necessarily have a lot of evidence and, backing it. So I think it's twofold. And again, I don't think there's anything wrong with kind of narrowing your focus to start and just, going, picking your spots and then really looking at those, on a more consistent basis and being able to see, how stuff evolves. And so I think you're probably better off going narrow and building out versus the other way.
Well, I like that, narrowing the focus and headlines. I mean, there's a reason when someone is good at writing a headline, it drives clicks. And I know because you follow the media just like I do, headlines churn until they find one that works, or they A/B test it until they find the one that works. I also find that for even my own articles, when they're featured on your site, I find that you've written a better headline than I have half the time. So looking at the headline is interesting if it's descriptive and filtering that way. But I also like that piece that you mentioned, the agenda. What is the agenda behind the writer there?
Yeah, no, I've noticed, just like you said, being the one or two sentence description of things, depending upon how I phrase that, can really change how people, even on my site, click through. So it's not, there's, whether we like it or not, we all have these sort of biases towards, stuff that is either salacious or interesting, or, especially anything in regards to the markets, anything that seems like it's, got some sort of insight into where the markets are people are going to click whether they mean to or not. So
people love forecasts. And
they do.
I will say that one thing that I've noticed over the years is, of all the content that you curate, it usually is not forecast based. And I love that. And that's part of the reasons that I always point to it. Maybe you can share why and I'm making a leap of assumption of having followed you for a while, why you aren't interested in sharing forecast based material as often.
Well, I think for me it's twofold. One is when I started, way back when I started the blog, almost everything written about markets was about where a stock's going, where the market's going. I mean, it was very sort of forecast focused, and I was like, that's not interesting to me. In part because, one is, and I think I'm sure you feel the same way. If you tell somebody to buy a stock, at the very least you can do is not only disclose whatever your position is, but also tell them when you've either sold or, whatever, you've changed your position. And I think people just throw stuff out there and they don't really follow up. And to me, that was really sort of annoying. And it was sort of a reaction to that. But I think the other thing is, we're just bad at forecasting. I mean, there's really, any sort of academic study on the forecasting ability of economists, analysts, strategists, throw whatever flavor of forecaster in there, by and large is pretty bad. And I think if you're basing, and so certainly that's one aspect to it. One is we're just not great at forecasting. Sure, can people get lucky? Can people have a string of good luck? Certainly, for sure. But I think the other aspect is, and I think you'll agree, is if you're basing your investment strategy on forecasts, either your own or somebody else's, you're gonna hit a rough patch at some point, and chances are you're going to upend your strategy and throw whatever you're doing before. You're going to change tacks either 90 degrees, 180 degrees, whatever it is, and that's probably going to be the worst thing. I think the worst aspect is jumping from strategy to strategy in hope of finding some sort of magic bullet. And I think that's certainly not the case. And I think so just de-emphasizing that sort of stuff, I think, is important.
Yeah, you and I are completely on the same page. And I think the most famous study that I always see is Philip Tetlock's, that 20-year study where he got leading experts from around the world predicting economies and political outcomes and all sorts of crazy stuff, and found that, no one was better than just random chance. And think that's a big part of when you're trying to educate a client base, as well as in your case, to some extent, the broad public. You're trying to do some good curation for them. So you and I both have seen a lot of different evidence. And so we put information in front of people. We try not to exclude information if it's relevant. In fact, I sometimes, Tadas, feel like I have a hard time getting your viewpoint on certain things because I will see you sharing information from both sides of an argument quite frequently. Is that intentional?
I don't know if it's intentional. I mean, I think, I'm certainly not trying to, transmit or, send through. I mean, I think if you're a careful reader, you could probably, if you're a really careful reader, I think you might be able to pull some of my viewpoints, but I think it is important to have, different viewpoints, out there. But I think it's also, to me, my motto has always been for, just to share stuff that's interesting. And so interesting can be correct, interesting can be incorrect, and everything sort of in between. And so I don't think necessarily, and again, some of this we don't, we're not going to know for, for long periods of time. And so, so for example, one example of that might be the current situation with inflation. And so, I think that's one where I think you can maybe bend the rules a little bit in terms of saying, look, here's how we got to where we are, and here's how the future might play out. Not necessarily which way it might play out, but I think what you get are, like we said, what you get are headlines, crazy headlines about, headline inflation, and it doesn't really take into account the nuances or how we got here, We're in the middle of a global pandemic, and we haven't shut down a global economy before and restarted it. So anybody saying they know how this is going to play out is either hubris or somebody just looking for headlines. So that's one really interesting. I think that's one current situation where I think it's worth sort of kind of letting it play forward a little bit just to see how it's all going to play out.
When you'd mentioned earlier that when a good headline's written, it can drive clicks, or you have a topic like inflation that's in the news, and so some compelling topic as it relates to that might help somebody better understand what's going on, I'm sure is getting more clicks these days. But given that you have the information, I'm a little curious in what you feel like the topics people are interested in most right now.
That's a great question. I think I kind of in part, I don't spend a lot of time thinking about what people are clicking on. I don't want that to influence me too much. So in that regard, I don't. But anything crypto related is always going to get a lot of attention. I think anything market related is always market related stuff is always the biggest clicks, even though it may not be the biggest part of any individual day's link fest. And so, but I think, certainly I think crypto is certainly at the top of people's minds right now. And, it's hard not to be paying attention. So
I feel like it's the most fascinating thing that I've had in my career, and that's having watched the financial crisis. I mean, fascinating in very different way. In both cases, with most crises, the common thread in them is that you should have an expectation that they'll end and that the world will move on. With something like cryptocurrency, for me in my career, the range of outcomes is pretty wide, and at least we're getting different clarity than we were when it seemed around like 2017, everyone went to Thanksgiving and was talking about cryptocurrency. And so There was a flood of information and interest, and then there was a lot of cool off, and then the pandemic hit and people sat around and they made quick money. And so now there's a lot more interested in it, and there's a lot of paper money out there. And I no doubt have a ton of interest. I also am fast to admit I have no idea what to expect. I don't know, do you have any feelings about the allocation of crypto, and when people come up to you and want to have input on whether or not they should invest in cryptocurrency or NFTs or really any sort of alternative digital asset, what are the sort of things you're telling those people?
Well, I'm not really getting a lot of those questions directly, but I think it's really part of it is, I think the interesting aspect to it is the institutionalization of it. I mean, I think, like you said, from 2017 to 21, I think a lot has changed, and so I think there's little doubt that in that respect, it's a lot different than it was a few years ago, and so I think people should probably kind of take that into account.
Well, and so I think it's great. It never occurred to me that you might not look at what links people are clicking the most in topics, because I suppose that would color what you choose to share. Maybe that's obvious after hearing you say it, but it didn't occur to me in advance. Maybe a different question I would have is, because you are consuming lots of content, or at least scanning content to decide what to consume, do you feel like there are any topics that people are paying too much attention to, that are getting too much coverage, more than what is really necessary, or things that are just beaten down and tired and you wish that content would stop coming out?
Oh, it's funny. Some of that stuff, like you said, some of that stuff really burnt, you kind of see these waves of things sort of burn, kind of run through the system. And so for a long time, it was this tired, it was this active versus passive. And then it shifted over to factors, what factors should we be investing in? And then that's you kind of burn through that as well. And so, stuff like that, I think, to me, it's funny. Sometimes you see stuff that still sticks around. You're like, why are people still writing about some of this stuff? It doesn't even, it doesn't even make sense anymore. And so, again, those are a function of, I'm sure, there's some file at a publisher, and they go into that file and they click on it and see what they, update some old story. So, but yeah, I think people run through that. One thing one thing I've been thinking about of late, and it kind of dovetails with crypto, is, I think to some degree we understate the changes that have happened over the last couple of years. And certainly some of that is pandemic related. But, between, increased retail participation, and not only how retail traders are trading, which is, like through options and things like that, cryptocurrencies, and even the spread of sports gambling, sports gambling is available, over, I would say, probably a majority of the country now. NFTs and all of that stuff, we've kind of, almost everything is a trade these days. And now we have, even now we have, there's new exchanges that will allow you to, make trades on events, events that are happening. And so, it's really, I don't know if it's going to take like a big bear market to shake all this out. Maybe this is just a permanent feature of the landscape going forward. And I think some aspects of it are really interesting and great. Some aspects of it are somewhat more troubling. But I think in a world where everything's a trade, it makes it kind of distorts the way you look at the world a little bit, I think, certainly than just a few years ago.
Well, no, I've always felt that the pandemic making a huge difference in a number of new retail traders coming to the market, but also there's an explosion in the number of people who can broadcast an opinion. And you were on the forefront of bloggers who were putting opinions out there. Now you open up any social media and everybody has a platform. And so a lot of people holding themselves out as having knowledge that, doesn't make me very comfortable, but yeah, that's a different topic for a different day. But I do think even advisors, or someone like myself as chief investment officer, I actually had a conversation on this show with Phil Huber, who's chief investment officer at Savant. And we were talking about how important the role of communication is to the CIO today. Because before, you just had to be really good at due diligence. You didn't necessarily have to communicate beyond your investment committee or your team of advisors, or the people who need to be aware of what it is you're doing. Whereas nowadays, it's the expectation, not just that your advisor maybe has a view, but shares that view and is consistent about it, consistency being the key and the difficult thing. I wonder if you see that at all. Again, as someone who's consuming a lot of content, there's a lot more voices out there. And it's also hard to have something to say that's truly original. I mean, I think all ideas seem borrowed at some point, but with the vast range of podcasts, blog posts, mini blog posts, I don't know, micro blog posts, is that what you call when people are writing little posts on social media? There's just so much. It can be a little overwhelming, and I suppose that's probably driving a lot of the people to more investing. But I guess in the framework of advisors, allocators creating content, do you agree with that's becoming a more important part of the current day advisor?
I think there's two parts to it. One is, whether you like it or not, your clients are, consuming all sorts of stuff, YouTube, TikTok, Instagram, Twitter, Facebook, blogs, traditional media, even cable news, God forbid. So that's kind of the milieu in which, we're all kind of living in. And so I think you can't, if the old cartoon, there's of somebody at the computer, there's somebody, somebody's wrong on the internet, I need to go rebut what they have to say. So in a certain sense, that's sort of out the window. You can't rebut all the bad information that's out there. So all you can really do is focus on your own house. And so in that regard, the one thing that makes Ritholtz Wealth Management different is, we've all been writing for a long time. And it's just part of our process. And it's just trying to put good stuff out there in whatever form or fashion. And so, whether it's written or audio or video, whatever it might be. So I think that's all you can really do. And I think there is certainly something to be said for consistency. One of the things I've always seen in the blogosphere is that, somebody will come on, write a few great posts, and then either they quit because it's too hard, or they go off in a different direction. The quality declines. Whatever it is they had to say, doesn't make sense anymore. And so I think just being consistent, I think is an important part of it. And I think that's especially the case when it comes to communicating with clients. Knowing that if something happens in the markets, good, bad, or indifferent, knowing that, having knowing in the back of their mind that that you have something to say about it. And it may just be, you may not have some definitive answer, just knowing that we're looking at it, we're thinking about it. And we, this hasn't gone over our heads. I think that's really important. And so, and I think the challenge is that's not for everybody. It's hard. I think, not to talk out of school, but before we started this podcast, we talked about the challenge of sticking to a writing routine and being able to do that. And it's not easy. And so I have, part of me can only talk about what I do and what, the people on my team do. But, for other advisors, for other investors, I think that's a real challenge. Yeah.
Yes, and I think for myself, you definitely aren't stepping out of bounds. I know that my publishing cadence has gotten less consistent, particularly as I started this podcast. And for listeners who wasn't behind the scenes, look, I was talking about I've carved out this time to make sure I publish twice a month. And I have maybe a dozen half-finished articles, and I think that's the challenge that a lot of writers who it's not part of their everyday routine will face, is that you can have ideas, and if they're not complete, or if you want them to be perfect before publishing, perfect is the enemy of done. There is no doubt about that with writing. But for me, the writing process has also been one of learning. And I can certainly tell that in your own writing, Tadas. I've followed you for well over a decade at this point. And when you write down thoughts on a given topic, you have ideas that maybe you didn't even really realize you had until you got them out there on paper. And I think it's really important to the learning process for investors in particular who are making choices based on some presumptive piece of knowledge they have. The more you write that stuff out, the more accountability that there is in those ideas. I know Bob C. Wright, who has a great Substack letter for those of you who are not familiar with him. He always talked about writing just for accountability at the onset. And so for me, I think, a lot of this stuff that advisors are doing to write out and to have an opinion, like you said, clients, I think, want to make sure that we're thinking about this stuff. And oftentimes with good investing, the best action is no action. So it's fine to see a news story or a major event, put it into context, make you understand that it is part of the plan. The plan, for most good advisors, involves randomness and downturns with a similar frequency and magnitude as we've seen in the past. But the plan is based on the fact that the future is unknowable. And so these writings, I would agree with you, in particular in your role of education at Ritholtz, I'm sure that that's a big contribution that you're making to clients, is showing, hey, we're thinking about these issues. We may even have opinions on them, but it's not necessarily informing the portfolio decisions. Is that fair?
Oh yeah, no, absolutely. I think, anytime you can, I think that's that's sort of the value of having a microphone, a blog, or whatever it might be, being able to talk one to many, I think is really valuable. And I think if you can answer somebody's questions before they pick up the phone and call an advisor, for what, I think if you can assuage their fears or give them some information, I think that's all to the good, and that allows the advisors to focus on the stuff that that's really important, as opposed to what the new coronavirus variant is going to do. We're not epidemiologists, and so I think focusing on the things that you can control and letting advisors spend their time talking to clients about those things is, I think that's the value add there.
Sure. And usually there's a question behind the question and sometimes a question behind that question that ultimately boils down to, am I going to be okay?
Exactly.
And I think that's really, a lot of times people don't realize that the value of an investment advisor is not to necessarily beat the market or know what stock's going to win or lose. It's to help you stay the course and help you, remind you of what's important, because earning average returns is actually very difficult. Average returns is what we're always looking at, and yet most people don't earn them. It's very, very hard. So I think that's a big part of it. I kind of started out this conversation with asking you, how do you read all this content and how can other people think about consuming information? As you educate your client base and the masses through the blog, if there was one piece of wisdom that you could magically impart to all investors so that they don't have to go and do all this work, what would that be?
This is something I've thought about a lot, and I think all of the great successes in this world, whether they be financial, political, entertainment related, all of the successes come with a big dose of luck, usually fortunate luck. So anytime you see somebody out there telling you, it's almost become kind of a, here are my life hacks for becoming for becoming a millionaire, which is also one of my pet peeves. Anytime somebody puts millionaire in a headline, I can usually just, I can click right past it. Anybody who's been successful has been lucky for any number of reasons. And I don't think there shouldn't be any shame. It's not like something, oh, you've been lucky, that's just the nature of life. And, I think just recognizing that both, from, when it comes to looking at, people that are successful, and I think the other side of the coin as well. We've all been, everybody's been dealt their own hand in life, and just recognizing that, good, bad, and indifferent. And so, I think some of the, and at least when it comes back to investments in the financial markets, some of the worst mistakes people make are trying to piggyback on the success of somebody else. And if that success is just a function of a good draw, a good roll of the dice, or if you use the poker terms, a series of hands, it kind of tells you that sort of fast follow-on strategy isn't really going to work very well. So.
Well, that's a good piece of wisdom. I will say, for me personally, that was probably the life-altering piece of wisdom. I had read a Michael Mauboussin book, and I remember thinking, holy cow. And I was already somebody who believed in index funds, who believed in low costs, who believed in systematic investing, but there was something about the way he was laying out skill and luck that just clicked for me and really changed the way that I looked at decision making. Group decision making is a huge part of my role, and that sort of thing is wonderfully useful. And you mentioned people shouldn't be ashamed of having good luck. And everything is some mixture of skill and luck, but certainly in the investing world, I think if people really understood the contribution of luck more frequently, they would have different desires, different outcomes, different motivations to begin with. So I really like that.
Yeah, I would just second that recommendation for the Mobison book. There's also
skill and the success equation. That's the one for me.
I think there's even he's got another shorter piece from that you can find online if you Google skill and luck, which is also a good introduction as well. So yeah.
I'll make sure to link that in the show notes.
It changes the way you look at the world, and you go from a deterministic view of the world to a probabilistic, and so that really changes how you think about things. Yes,
that is the terminology. People at PlanCorp say I have Peterisms, and talking about probabilistic investing is one of the Peterisms that people poke fun at me for. Mobison is one of those people where I drop everything for and try to read when he puts out pieces. I'm kind of curious for you. Do you have, there's a number of people, but I'd love to hear for you. Are there any authors or thinkers out there that you know that you're going to carve out time when they publish something new?
Yeah, well, certainly Mobison for one. I think our common friend Morgan Housel for sure.
Sure.
Jason Zweig. Those are ones that I'm automatically going to read and take in, and so. But yeah, I think those are certainly three good ones for sure.
Yes, I am right there with you. Those are on the Mount Rushmore of financial thinkers for me. In terms of again, focused a lot on what other people are interested in topic wise. Is there anything that you're particularly excited about in the realm of investing or financial anything that you're excited about that people aren't talking about, or maybe they are talking about, but you're just particularly interested in?
I think one interesting, people are certainly talking about the flood of money into venture capital, which, I think we can argue about whether that's going to be successful from an investment or financial perspective. But I just kind of have my fingers crossed and hope some of the stuff that people are putting money to works. In the past week, there have been two different companies who are looking to commercialize fusion energy, and I'm like, great. I hope one or both of them are successhope. And anytime you look at these list of companies that are getting funded, and you're like, God, I hope that works. I hope just for all of our collective sakes. Some of this stuff pays off, and you could spend all day just looking at all these companies are getting funded, and you hope that they all they're obviously not all going to be successful, but you just hope enough of them become successful that it really has sort of has real impact on the economy and hopefully our lives in the future. So in the pandemic, people were funding, for 20 years, people were funding research into mRNA, and it just happened to be that a couple of years ago it became super important, and again changed quite literally millions of people's lives. So you hope there's another mRNA company. Or something related to it being funded today. So yeah, I think that's if you're going to be optimistic, that's something to be optimistic about.
Yeah, it's funny that mRNA Moderna itself was really looking at trouble before this pandemic. So it's interesting. And when you mention if you're going to be optimistic about it, what's perfect about that is when I am talking to people who are pessimistic about the outlook, it's a lot of people who maybe see the world and it looks a lot different from the world that they've known for so long, or maybe they let their political views sort of cloud what they think the economic or investing outlook would be. I always point them to podcasts with venture capitalists, because when you listen to really smart people talk about how to solve the world's problems, suddenly, even for me, I think, oh my gosh, there are people working on this stuff. This is really, really powerful. It's easy to get trapped in our bubble and not think of, you can point out all the world's problems, but unless you're listening to how some of the really brightest minds are thinking about solving them, I can see why people get pessimistic. But that's certainly a way to turn that pessimism into a little bit of optimism.
Yeah, absolutely.
There's a handful of questions that I tend to ask all of my guests, so I'm going to transition to those before we wrap up. The first, Tadas, is how do you invest your money?
I'll tell you that in one interesting aspect. So when I started, I was a dyed-in-the-wool DIY investor, and that's kind of the way when I started the blog, that was sort of in my mind, that was the audience that I was writing for. Sort of DIY investor. And today, the firm, Ritholtz Wealth Management is my money manager, and I let the investment committee at the firm take care of a lot of those decisions. So, outside of that, I have some stuff in venture capital, which is kind of the sort of the mad money, as it were. But the vast majority of it is in the strategies that the firm manages and runs. So over 15 years, I've kind of, and part of that's getting older. I think there's certainly an aspect of being able to let go of some of that stuff and being able to, for everybody. I think that's maybe one of the, for whether it's Plain Corp or Ritholtz or any other advisory firm, I think just being able to take back that time that somebody might be spending on their investments and worrying about them and all of that, I think, and being able to give over to professionals who think about this stuff all the time and allow you to focus on other aspects of your life. I think that's maybe the greatest value add. Like you said, it isn't about generating alpha. It isn't about picking stocks. It's really about giving people the peace of mind that they can they can hand off that aspect to somebody else and focus on other things that are hopefully more interesting. Not everybody is interested in crypto and PE ratios and inflation and all this other stuff that that we talk about in the blogosphere. So.
Well, and I imagine it's helpful having. I know for me, so it probably took me longer to hire an advisor than what made sense. And Plain Corp's my advisor. There's an advisor there who does the work, but it's the accountability. And it's the fact that I just don't have time. Now, I obviously have a lot of influence over the portfolio, so you could say somehow I'm indirectly doing it, but I never am thinking that way. I don't even look at my portfolio. I usually look at it once a year to fill out a net worth statement, and that's about it. So the accountability is huge, and as you get busy, we're both biased. I'm sure all our listeners are saying, of course, two people in the financial advisory space have an advisor, but we do, and there's a lot of value there.
Well, I think the only other point I would make, I think, is that advisors have advisors. Yep. They always say the doctor shouldn't be, diagnosing their own ills, and the same is for advisors as well. I think having another set of eyes, I think, is important. Like you said, from an accountability perspective, just also from trying to avoid blind spots as well. So,
blind spots, no doubt. One more question: what does it mean to you, Tadas, to be a long-term investor?
It goes back to just exactly what we were talking about. You look at your portfolio maybe once a year. You probably have some sense for what it's doing in the meantime. But I think it's being able to, and I think one of the things is, there's no one way to invest. I think we all have our preferences, and certainly from an advisory perspective, we have a certain way of investing as well. That's not necessarily right for everybody. Everybody has their own way. But I think, like you said, I think it's, if you have however you invest, as long as you have the comfort of knowing that that you have that system in place and that it's running, that you don't have to worry about it. You don't have to hold stocks for 20 years to be a long-term investor. To me, it's more about attitude and the way you view the world, and less about, specific time horizons in terms of specific securities. I think somebody could be a more active trader and still be a long-term investor so long as they are following a system that they put in place and that they feel comfortable with, that is going to get them to where they need to be or want to be. So
that's a great distinction. Tadas, thanks again for joining me. If people want to find you, where should they be looking?
You can find me at abnormalreturns.com, at abnormalreturns on Twitter. You can sign up for the email if you want to get bombarded from me every day. We can do that.
I enjoy getting those emails every day, so it's a good bombardment. Yeah.
Well, I'm glad to hear that. But yeah, those are the two places to find me, and always happy to hear from people. And it's I'll be looking forward to your next blog post. And thanks for having me on.
Thank you. And for everyone listening, we'll put links in the show notes, which you can find at thelongterminvestor.com. As always, thanks for listening, and we'll see you next time.